Clifftop villas are not just some of the most beautiful real estate in Bali, but some of the most beautiful in the world. Unfortunately, they're also very, very expensive. In this video, I want to look at an opportunity that might be an affordable way to own Clifftop real estate. Let's have a look at Bukit first. Bukit is the Indonesian word for hill, and the whole south of Bali is an elevated rocky area. Because it's highly elevated above the sea level, even when you're far away from the beaches and the ocean itself, you can, for example, have a rooftop on your villa and have some degree of ocean view. That, of course, is not the clifftop view. So when you're right at the edge, that would be at the cliff. And if you're at the top of that clifftop, the bottom might be a beach if you're lucky. But the view from up there is absolutely magnificent over the blue ocean. Real estate right at the clifftop is extremely rare and super expensive. But there is this property where they are building, you can say it's a hotel, or actually a condotel. So a hotel that doesn't have rooms, but individual units are more like a small condo, duplex condo actually. The individual rooms have a lot of amenities while giving you the privacy of a hotel room. They do not have a own pool like a villa or townhouse might have, but of course there are shared facilities as well, and a large infinity pool with ocean view is one of them. Now, having the unit integrated in a hotel, of course, has a lot of advantages too. You have a lot of facilities like restaurants, gym, larger pool than in our own villa, staff on site, lots of that, right? So there are upsides of that, but it also comes with a different operating model. This development has more than 100 or I think 150 units, and that itself makes it more like a medium to large size hotel and not like the typical vacation rental real estate like villas, townhouses, where you have few similar units. You buy one of them, you can customize it and manage it yourself. Now, rooms in a hotel don't really compete with each other. When you make a reservation with a hotel, you make a reservation with that hotel, maybe a room category, but you do not reserve an individual room. When you check in, there's one reception and not multiple from different providers, and you have to find the right one. Now that means a larger property, even though it has many, many different units owned by different people, will basically have to be operated by one single operator. So one hotel-like operator has to manage all the rooms, so in this case, condo units. So you won't have a choice of the operator, and that is one of the most important differences. Another one is customizing. Because you're not competing with the others, you can't really customize too much, and economically it doesn't make much sense to upgrade your unit when you're not getting more revenue or profit out of it. And also the actual rental will be done in a pool style manner and not on the individual unit. So as I said, the customer won't pick the unit itself, and he will be given or assigned a random unit. That means they're all the same. And it's not going to be luck-based how many days your unit will be rented out, and according to that you get revenue and profit, but it's typically in a pool. So let's say you have 100 condos that are managed as a pool. 50 of them are booked out. If you own one unit, you get half of the overall profit of that individual day. And it doesn't matter whether your unit is one of them that is occupied or not. That is purely luck-based. If you want to stay there yourself for, let's say, a week, it will be taken out of that pool during your stay, and you won't get a profit share in that time. So basically it will at all times be occupied at a fraction of the overall hotel occupancy. Now that also means maintenance has to be done centrally, because you don't know how much is your unit occupied, and the occupancy of the guests is what brings wear and tear. So you're not participating more on the upside, on the profit and revenue when it has a high occupancy, but you're also not suffering from the high wear and tear and having the higher maintenance costs. So all that has to be managed centrally by the provider. And in many ways, it's more like owning a share in the company that owns the hotel, but the share is kind of corresponding to one unit. So it's very, very different than actually owning that unit in terms of look and feel and what you can do with it. But not having the choice of a provider might be the most relevant restriction, because that means if the provider is good, it might be very profitable. If the provider is not good, or the property is not that good, you won't get much money. The provider will make sure they're getting paid, but your return on investment is the first that will go down. And that unfortunately also applies when things are going really well. The provider will make sure that he gets paid more, and hopefully you also participate to some degree. But because you cannot choose, you cannot opt out or compare with different providers on their fee structures, you will always be on the shorter end of that. So these are a couple downsides of that model. Of course, there are big upsides as well. You might have that affordable opportunity to own cliffside real estate, and it's really a hands-off investment. You can't interfere with the operations or be involved in the operations, but you also don't have to, right? It's all managed for you. You just write the check once and that's it. So you might consider that an upside too, but really up to your taste. How deeply do you want to be involved? You cannot get involved. You cannot opt out or choose a different provider. Now for this one, let's have a look at the numbers itself. So it starts, the sticker says 355,000 US dollar. Of course, you have the duration of the construction and you have a payment schedule and all that. So it's reasonable to add a couple percent. So let's say around 370, 375 as a purchasing price, including some lost interest during the construction time. There might be additional fees like public notary, but in this case, it's probably covered by that central fee because it should be all very, very structured. Now they're promising a fairly high return on investment, but I would always be very careful on that. Let's have a look at what other similar properties in that area are charging and getting away with. So to have some ideas of what a daily rate can be in a hotel like that. And of course, from the operator point of view, it is a hotel, so they can also have additional income streams like the restaurant, a nice spa, all these things. That is additional income on their side. While, of course, the facilities of the hotel, the nice pool, the large pool, gym, and all these things will be charged back to your room to some extent because they're not individually charged to the guests. So when it comes to management efforts and expenses in operating, I will go with a standard assumptions that around half of it goes into your pocket. Into your pocket means the cost of depreciation and cost of capital is not yet covered, but really operating expenses, management expenses, and tourist taxes, platform fees, booking fees, all that is already covered. And with the remaining 50% that you will be getting, you need to make sure your personal taxes are covered, as well as depreciation of your asset and your personal cost of capital. So when I pay 375,000 US dollar for a leasehold property, I have a very quick check to see if that can be a good investment at all. And that's very simple. I look at the average daily rate that I hope I can get and see if it's 1/10 of a percent at least of the purchasing price. Looks way too simple, right? So let me walk you through that. If I assume 70% occupancy rate, that is 250, 255 days a year. 250 days divided by 1,000th of the purchasing price means a quarter. So I have a revenue, gross revenue of a quarter of my purchasing price on an annual basis. The profit, operating profit, will be roughly half of that, so 1/8. And that gives me about 12.5% operating profit, out of which I have to pay the depreciation of my leasehold as well as the cost of capital. And that means, let's say, 4% depreciation and 5% of the cost of capital. So that's 9%, leaves me with 3.5% in a conservative estimation. And that is definitely good enough for me to invest if everything else is all right. So let's have a look whether I can get $375 a night at least, and an average over the year. So I have a quick look at booking.com and see what other properties are there in this area, Clifftop Edge. And I see there are very, very few, which is interesting, right? So there's very little supply, but it's still good enough to give me some information, some indication to verify what daily rate can I get. And I'm looking at a couple of these properties that are on the Clifftop Edge, and they're actually all getting more than $500 in the low season and having a very, very good occupancy rate as well. So that looks very attractive to me. Now, having all that said, it takes a lot more due diligence to look into an individual offer, because as I pointed out in the beginning, there are so many concerns regarding the partners you are stuck with, whether they are good, what is the long-term deal in the profit sharing. So all these needs to be looked at in a lot of detail, and it must be made sure that it's tight in some contract and not just verbally with the sales agents who you will never be seeing again when the whole thing is over. So there are a lot of concerns still left, but the potential is huge, right? When we get $500 a night in the average, then that is more like 15-16% operating profit. So that's very, very interesting. So Clifftop property in Phuket can be a very interesting investment. However, only if you don't overpay. Imagine the same calculation, but you have to pay 2 or 3 million for it, then it would not be an interesting property. So a lot more due diligence needs to be done, but clear go ahead from a first look. If you like these kind of analysis, follow my channel for similar content on Bali and across the region of Southeast Asia.